Good morning, everybody. It is April 28th, 2016. One more trading day tomorrow for this month, and then we're into the month of May. And Reg and his Canadian brothers are sharing some more of their cool air with us. We're going to have unseasonably cool weather for the next 4 or 5 days, and maybe some moisture again, too. So Canada exports probably their biggest claim to fame, cold air. To the southern 48. Yeah, definitely it's still hockey season down here. Okay, the big news overnight, Bank of Japan did nothing for the last week. Corda and everybody have been talking about helicopter money, negative interest rates, buying more stocks, all sorts of things, and came time to act and they did nothing. Markets on a rumor fact situation, equity markets around the world had rallied off of that, and Bank of Japan failed to act, and equities have sold quite a bit overnight. Gold is up, the dollar is down, the yen is up, the euro is up a little bit too. So once again, it just shows that how fragile the markets are. They are being held up at these levels, given declining sales, revenues, earnings, etc., by central bank intervention, and that's not going to change. Looking at treasuries today, the biggest positive is the 7-year auction. At some point that will bring in support, and you can see that we probably have the cleanest break in the market at 28. So support starts at 28. 24, 28 will be buy 1. 17 to 21 will be buy 2. On the sell side, failure to get through 03 will be sell 1. That could probably hold up on the first rotate up this morning. Then 11 to 15 for sell 2. The stock market continues to sell. We don't want any part of the short side of the market. GDP this morning can come in lower than forecast. Bank of Atlanta has it at plus 0.4. The consensus opinion is plus 0.7. Deflator plus 0.5%. Jobless claims 260. And they're cooking these numbers now too. Natural gas inventories plus 70. And KC Fed, don't know, didn't have an estimate. Last month it was minus 6. That rarely brings in any reaction. Philly Fed does. Empire Manufacturing Survey does. Sometimes the Dallas Fed does, but KC Fed usually doesn't. So that could come in lower than forecast, whatever that might be. So lower than last month's at minus 6. The focus is GDP. And then the stock market. And then the 7-year auction. And my guess is we're going to find buyers on weakness early this morning. Looking at the 30-year, there's some room in this one for a little bit more range given what happened in the knob spread last night. The breakout came from 24. We're at 31. So 24 to 28 is our first potential area of support. Buy 1, 17 to 21. 9 to 13 for buy 2, and I got the buy side close because of the auction. 5 to 9 could be the leaning against 8. This area down here, this breakout at 6. So that's another possibility. 5 to 9. On the sell side, first resistance begins way up there at 8. So 4 to 8 is 1. 11 to 15, sell 1. 19 to 23, sell 2. Now, if our number 1 levels do hold, then we should expect the market to trade to the corresponding number 2 on the other side, either support or resistance. So keep that in mind. Gold's up pretty strongly overnight. Again, we like gold. We like it to the long side. We like the idea of buying into weakness. And it's had a hell of a run, from 38 all the way up to 62. So almost 25. A $25 range is a lot. You can see volume, most recent in the market's memory right there. Stop the market. There's one volume node for us. We're in a high volume area right now, going back and forth. The low volume number's at 53. The extension on the failure to cut rates came at 52. So this 50 to 53 is buy one. It's an area of interest. And we also have the high from yesterday. So actually let's make it 55, 53 for buy one. And 49.51 for buy two. On the sell side, 58 to 60. Then 64 to 66 for sell two. Okay, the two biggest spreads that are played are the dollar to the euro, and then the euro to the yen, dollar to the yen. And with the failure, really the ECB didn't act as much as expected on the last go around, and the Bank of Japan now has not acted. So 114 even, 114.50 is where the sellers are. 112.50, 113 even is where the buyers are. So 13.75, sell one. 114 even, sell two. I think we've probably seen the high in the euro in London. I mean, they are the start of the currency markets around the globe. We're at 1360 right now. We got a pretty big ledge down here at 40, so 40 to 50 buy one. And then our 15 to 25 buy two. Crude oil. Dollar got whacked last night, and that tends to send crude prices higher. 45.50, 75, sell one. 46, 46 and a quarter, pretty much where we were last night. On the buy side, 44.75, 45, buy one. And then 44.50, 44.25, buy two. For reasons, again, there really aren't trading fundamentals. Crude's hanging in there pretty darn good. And the neat thing about the way we approach this market is that we don't pay a lot of attention to fundamentals. It makes us more cautious on the buy side and more aggressive on the sell side, but not much more than that. And that's kind of the way that you need to handle fundamentals. The joke that goes around, they're called fundamentals. Yeah, the market trades fundamentally one day a week. But the overall trends, directional movements, are caused by fundamentals. There's no way that you can get around that. And here's the spill when the Bank of Japan did nothing. Here's your London high right there. So we have a resistance begins at 80. Last rotate up was 78, so 79 to 84. Sell 1. 89.94. Sell 2. And the key is going to be what is the Fed going to do today? 70.72 buy 1. And we'll make 60 to 65 buy 2. And right here, if that number comes out, really the next stop is 2050. 2050 comes out, the next stop is 2030, plus or minus. GDP plus 0.7. Deflator plus 0.5. We are in stagflation, and we've been talking about this since 2009, about the Japanese experience being manufactured around the world by central bankers that have developed in following Japan's policies of printing money, basically, to cover up the shortfalls between tax revenues and spending by the government. Plus 70 BCF, natural gas, KC Fed, don't know, and 260 for jobless claims. So the focus is GDP and whether the Fed intervenes. Now, where will we look for Fed intervention? It's going to be the 50-lot player. If the 50-lot player is aggressive on the buy side as the market opens, each time the market breaks, if the 50-lot trader is there buffering the selling, we know that the Fed's active. And while the market can sell, we don't expect the bottom to fall out of it. And I want to just show you on the F4 screen, for those of you that are new, what we'll be keying off of. It's going to be right here. And you can see right now that there is some light buffering by the Fed. 298 doesn't mean anything. We had shorts of 1300, so not a lot of play by the large player overnight. And so whichever way this player goes on the opening or shortly after the opening will determine ultimately which way the market goes today. You'd think the market would be lower, but in this day, that's never a guarantee, or as good a guarantee as that it's going to trade higher. Okay, it's going to take a bit to get everything up and posted. I'm going to get busy on that. I will be back as soon as possible.